Hey everybody, Economic Ninja here. I've got a pretty urgent update about crypto taxes as we're about to pass into 2026. There's a lot of changes happening with the IRS, how crypto is going to be taxed. Most people don't even tell the IRS they have crypto, and sadly, since 2013, the IRS knows every single person that's got crypto. We want to start. Let's go over the safe harbor. I'm here with my tax planner and CPA, Zishan. We wrote a whole course on it. I'm having a big sale on that and the tax planning course down below. All my courses are on sale for January 1st, the New Year's thing. But it's really important because we just uploaded an update for the course members, and we're going to have to keep uploading updates for this crypto tax course because things are changing so fast. So let me tell you the problem. We taught in our course HIFO versus FIFO, which is really important. I talked about it a month ago on the channel for free, where investors have the ability through a safe harbor to choose either way their crypto gains or losses are taxed. Can you explain the difference between HIFO and FIFO? And then we're going to get into this emergency update.
Yes. So FIFO, FIFO and HIFO are two ways of determining your cost basis, okay, whenever you try to sell your crypto. So FIFO stands for first in, first out. So the first batch of crypto that you've ever bought is the first one that also gets sold. So let's say you bought Bitcoin for like $1,000, like back in 2013. Yeah. Now it's $100, but you bought a batch recently, okay, for $40,000. So the $1,000 Bitcoin is going to be sold first, and then the $40,000 Bitcoin is going to be the one that is sold second. But with HIFO, it's highest in, first out. So the one that you bought for $40,000 is, because it's the highest costing Bitcoin that you have, is the one that's sold first, and then the Bitcoin that is sold second is the $1,000 Bitcoin.
So imagine this this style of taking, recording your tax gains or losses really helps out long-term investors that all of a sudden want to take advantage of a high point, right? The people that have been DCAing in forever, they've been buying Bitcoin since it was $1,000 or $20,000 or $30,000, and all of a sudden, they bought some at, say 80,000 and it's 100. If they want to sell a little bit of it, it would just record off that highest purchase first, which would be the smallest gain. So that's really exciting. But here's the problem. The Safe Harbor Act allowed, and it has been extended 1 year already up until today. It allowed, and this isn't tax advice from me, this is a tax professional, I'm not. It allowed you to be able to still choose whether you wanted to be recording forever under HIFO, FIFO, LIFO, all of these different acronyms, right? That's correct, right?
So the biggest thing, it allowed you to allocate your cost. It was like before 1/1/2025, we were under a universal cost basis system. Okay, so all the costs associated with all your wallets were just spread out, and you didn't really, I couldn't identify what cost basis was a Bitcoin and Kraken versus Coinbase versus a private wallet. So the safe harbor forces everyone to allocate out their crypto cost basis wallet by wallet. Yeah. So the IRS now can figure out how much is your gain on Coinbase, how much is your gain on Kraken, and we're going through this transition period over the next 2 years. Okay, so that's the biggest piece for the safe harbor that has to be ironed out before today.
So here's one of the biggest problems, and we just updated this for our students, and we're going to continue to do updates as these come out. When you're dealing with these exchanges, they're putting out numbers that are completely bogus. Every different exchange is putting out different numbers, and you're going to be sitting there going, oh my gosh, what just happened? I did not make that much money, right? Or I lost more money. So you're forced to use third-party apps. So Crypto.com is one of those exchanges that is not allowing you to select between HIFO, FIFO, LIFO, or whichever way you want them to send the gains or losses to the IRS. So here's an issue. I want HIFO. I've got Coinbase. I got Gemini. I already selected HIFO. I go to my Coinly account and I select HIFO. But here's the problem. Crypto.com doesn't want to do that. Uphold is another one that doesn't want to do it. You checked Kraken, and Kraken allows you to select.
Yes.
Yep. So here's the thing now. Yeah. You've got this issue, and this is going to be a real sticky issue, and we're still waiting for newer guidance in the first quarter of 2026 before tax season And that's why this is an ever evolving thing. So what we are choosing to do, and I'm going to tell you this right on the channel for free, we're doing is telling our students, I am going to personally, this is not tax advice, I am picking my stance as HIFO. I have selected it on every exchange that I can select it, and I'm going to push my all of my wallet information to my tax software that I use. I'm selecting HIFO on the tax software, and I know that more than likely crypto.com or other exchanges that won't let me choose are going to send a bogus number to, and it is bogus because they don't let you choose. They used to let you choose, and now they don't. They're going to send a different number to the IRS. So I may get a letter from the IRS, and I'm going to be reporting about it here because these exchanges need to get on board and allow them to do this, or the IRS needs to put out better guidance, because there are a lot of us, like myself, that are being honest with what we make, what we bought, what we sold, our gains and our losses, and we just need to know what sandbox to play in. So we wanted to put out this information. It is very vital that you use at least a third-party software to record all your transactions. Would you agree?
Yeah, so I've always told my clients, like from day one, like, hey, look, you have to like have some software that tracks all this stuff, and you have to have all these records, because these exchanges, the data, sometimes you can't pull it for more than like 6 months. So if you haven't, you have to have all that data loaded into a system, and then you keep the cost basis and track all these crypto transactions you have since the beginning of time, since you started, right? So you need to have a method actually separate from these exchanges to actually track your cost basis for all your wallets, just not on the exchanges. That's right. So that way you can have the documentation whenever the IRS comes and reviews it to say, hey, look, I've tried my best to actually keep good records for what I'm trying to do here, okay? Even though the exchanges are reporting a different number, these are what I have, and this is the data associated with it, so that they can verify it.
Now, guys, I don't want to go long on this. If you guys want the course, it's down below for the January 1st sale. It's set up as a bundle, the Personal Tax 101 course and the Crypto Tax Pro course. They're bundled together. Great deal on those if you want to take that, learn from it, and then you're going to need to share a lot of this with your CPA, because most CPAs in this country do not understand crypto because they don't invest in it. This is going to be a problem, okay? We want to get ahead of it so that you can do what you do best, and that's go crush it in 2026 and not worry about this stuff. All right? With that being said, thank you so much. On behalf of Zishan, the Economic Ninja, we're out.